𝗕𝗂 just dropped a $100 million bombshell, but it's not what you think. Stick around because this move could rewrite the playbook for Bitcoin, XRP, and every other institution still on the sidelines. I was halfway through my first cup of coffee when the headline smacked me in the face. 𝗕𝗂 International unveils a $100 million crypto ecosystem reserve. Now, headlines throw big numbers around all the time. Remember when trillion-dollar valuations felt like science fiction? But this one had me kind of choking on the steam because it wasn't just another corporate, right, we bought Bitcoin stunt. 𝗕𝗂 says that they're building something that behaves less like a treasure chest and more like a living, breathing fuel tank that feeds the next wave of blockchain projects. So picture this, right? 𝗕𝗂 International, basically the Swiss Army knife of crypto finance, has put aside a crisp $100 million to do three things at once. First, bankroll high-impact blockchain teams that could be tomorrow's household names. Second, shove a chunk of cash into high-conviction assets like Bitcoin, XRP, and a handful of layer ones that they straight up believe in. And third, my favorite part, build a no-nonsense on-ramp so that pension funds, asset managers, and other suit and tie giants can finally get their feet wet in crypto without feeling like they've stepped onto a roller coaster operated by clowns. So if you've watched crypto headlines for more than 5 minutes, you know that treasuries are nothing new, right? MicroStrategy hoards Bitcoin like a dragon hoards gold. Metaplanet in Japan is trying to copy-paste that strategy. Even a few nation-states are flirting with the idea of crypto reserves. But 𝗕𝗂's playing a different kind of sport here. Now, instead of locking coins in cold storage for a decade, they plan to redeploy chunks of that stash, turbo boosting promising DeFi startups while keeping just enough dry powder to stay nimble. They're not wasting any time either. 𝗕𝗂 already kind of slipped an early check to DeFi Developer Corp, that's DFDV, on Solana and teamed up with Hash Global for a BNB focused fund. The translation here? They're elbow deep under the hood before folks have even popped it open. Now, here's what had me kind of pacing the living room, right? 𝗕𝗂's selection process isn't some kind of smoke-filled room committee where suits kind of flip coins. Well, that's actually leaning on AI-powered decision engine, right? So think Iron Man's Jarvis glued to Bloomberg's terminal, right? It kind of sifts through on-chain data, liquidity metrics, developer activity, and even the emoji storms of crypto Twitter. Then spits out a heat map of projects that could leap from garage to unicorn status. Now that blend of brutal data crunching with human common sense feels like the secret sauce that everyone forgets to add. And so why does any of this matter to you, me, or the teenager kind of day trading altcoins between math classes? Well, it's because institutional money is the missing puzzle piece. Retail kind of lit the spark, developers built the rocket, but billion-dollar funds provide the fuel that keeps engines burning longer than a weekend pump. So up until now, risk has kind of been the big kind of showstopper. Hacks, flaky liquidity, patchy regulations. Crypto has kind of been more scares than a kind of haunted house. But 𝗕𝗂's pitch is quite simple, right? We bubble wrap the volatility, slap on GPS tracking, and let institutions stroll in without breaking a sweat. And their shopping list kind of reads like a crypto Avengers, right? Bitcoin's the kind of battle-tested tank, XRP's the cross-border courier that kind of moves money faster than you can say Swift who. And Solana is the kind of track star chasing sub-second settlements. Ethereum's the kind of Stewart backbone of smart contracts. Sui brings bleeding edge move-based architecture, and BNB, well, Binance Smart Chain, still kind of cranks out dApps like a factory on triple shifts. Sprinkle in stablecoins like World Liberty Financial USD1 to kind of park value when markets kind of start doing cartwheels, and it's kind of like diversification with a dash of foresight. And every hero's journey kind of needs a dragon to slay, and here's the monster in the status quo. Institutions still chew their nails at markets that can swing double digits because of a cheeky Elon meme. Now, Amber's challenge is to prove that an actively managed reserve with kind of ironclad guardrails can actually tame the beast. And if they succeed, they're basically rolling out red carpet for the next tidal wave of capital. Now, a $100 million sounds enormous until you remember daily Bitcoin spot volume often dwarfs that. Will Amber really move the needle, or is this just another hype source? Well, to kind of ground check my gut here, I rang the hedge fund buddy who spent 2 years, passing crypto regulations, and his verdict: it's not the size, it's the signal. Now, if Amber nails this template, pension funds will copy-paste faster than you can say Excel. And that kind of made me spill my second coffee. Cold brew this time. Okay, so let's zoom out, and you can't really miss the geopolitical vibes, right? The United States is openly toying with a strategic crypto reserve. So imagine Uncle Sam stockpiling Bitcoin like barrels of oil. Amber's plan could be the private sector proof of concept that nudges lawmakers from maybe to must. Now, if that door cracks open, liquidity floodgates might actually make 2021's bull market look like the kiddie pool. Okay, so let's get personal for a sec then, because I bought my first Bitcoin in 2013, right? Sent $5 from one wallet to another, and it felt like I'd performed black magic. Fast forward to today, and AI is kind of creating 9-digit funds. DeFi protocols are replacing middlemen, and companies like Amber are stretching, or stitching, I should say, a kind of a trad finance suit right into crypto's hoodie, if you will. Now, it kind of feels like watching two universes collide and somehow form a kind of perfect orbit. But the path is anything but straight, right? Hacks still happen, regulation is still whack-a-mole, and global macro, well, one Fed sneeze and risk assets could catch the flu. That's why Amber's risk management skeleton, audits, compliance, reviews, 24/7 dashboards, is the difference between a kind of flashy PR stunt and a sustainable bridge. Right? Institutions won't step onto a bridge unless the cables are tighter than their fear. And so imagine Amber's reserve as kind of 3 interlocking gears. Gear 1, that's the core vault, right? Holds the forever stack of Bitcoin, XRP, and friends, right? Guarded by Fort Knox of programmable, at least programmable enough, I guess, to rebalance on market shifts. Then you've got gear 2, right? That's the opportunity engine, right? Ventures style injections into kind of protocols that pass the AI sniff test, right? More sniper rifles than shotguns. And then you've got gear 3, right? The institutional gateway, custody as a service, and structured projects, products that kind of stick and slice kind of risk into bite-sized tranches, right? Basically, crypto on training wheels for the big kids. Run those gears through Amber's AI and you kind of get decisions sharper than grandma's tongue when you kind of skip Sunday dinner. Now, it crunches GitHub commits, whale wallet flows, and social volumes. Then a human committee rubber stamps or vetoes. Now that human in the loop is clutch, right? AI alone can, of course, chase shiny objects or hallucinate, and seasoned analysts, and you kind of get a decision stack with, well, teeth. Okay, so quick hydration check. If you want daily alpha without the kind of doom scrolling Twitter, smash the link in the description down below and hop into our free crypto Discord server where we break down moves like Amber's in real time, and we've got the memes to keep it spicy. Okay, so let's get back to the show and let's zoom in on XRP, the drama queen of crypto, right? Court cases, bank rumors, diehard fans. It's the soap opera with a ledger. Now, Amber choosing XRP isn't just for kicks. It's a calculated bet that cross-border payments are kind of mitigating or migrating, I should say, from snail mail Swift to blockchain express lanes. If that switch flips, companies holding XRP aren't speculating. They're actually sitting on a toll booth. Bitcoin is the safety blanket. Solana brings ludicrous speed, and when it kind of stays upright, that is, of course. And Ethereum is the kind of grey, bearded veteran, slower and pricier, but battle-tested. Sui is the wild card, kind of fresh out of the oven, and BNB is the hustle chain that keeps kind of shipping, right? Blend them together and you kind of get a portfolio that's spicy enough for upside, but solid enough for institutions. Okay, number time. If Amber parks 40% of that, so that's kind of like $40 million into core assets, spreads across 6 tokens, that's roughly $6.6 million each. Another 40% funnels into project investments, smaller checks, bigger upside. The kind of remaining 20% maybe stays in stables for dry powder. That's flexibility that lets Amber kind of pivot like a Formula One car hugging, apexes. But paper plans mean nothing without execution. Technical audits must catch smart contract bugs before hackers do. Legal teams juggle, jurisdictional spaghetti. Singapore, Cayman, New York compliance desks churn through endless KYC flows. Snap one link and, institutions will, of course, bulk. And so here's the cliffhanger. Will Amber's reserves spark an institutional domino run or fade into the archives, right? Track record will tell if 6 months on, pension funds are buying structured notes seeded by Amber. Game on. If all we hear is the AI misfired backing a kind of rug pull, well, game over. And us retail investors, well, we have nimble feet here, right? Institutions move at glacier speed. Research the projects Amber's kind of eyeing, right? Bitcoin, XRP, Solana, Sui, Ethereum, BNB, and you can position before big wallets even finish their due diligence homework. So do your own research. Never invest more than you can afford to lose. The kind of usual disclaimer, but you kind of get the picture. And speaking of positioning, if you're kind of itching to start trading crypto with the best up and coming platform out there, join the Blowfin crypto exchange via the link that is in the description down below and start trading crypto with the best up and coming crypto exchange. They've got a slick interface, deep liquidity, and they don't treat altcoins like second-class citizens. Early movers usually snag the sweetest perks. Okay, so let's zoom out again and imagine Amber's AI greenlights a protocol that nails real-world supply chain tracking. Right, the reserve injects a few $1 million. Right, competitors swarm in, VC rounds balloon, and suddenly a whole subsector is booming. Right, a rising tide lifts all boats, but it starts with a spark. Amber wants to be that spark factory. And so, who remembers the early internet when Cisco shipped routers everywhere? Finance innovators secretly kept that hardware flowing with venture debt and convertible notes. Now, Amber's reserve feels very similar, financial plumbing for the blockchain age. 5 years from now, we might look back and realize this was the moment that crypto matured from hustle culture to capital market staple. But let's not ignore regulation. The SEC kind of waffles on what is and isn't a security faster than I can change TV channels. Right? Amber's compliance framework isn't a nice to have. It's the moat that keeps lawsuits at bay and the institutions confident enough to walk in. Now, this isn't just VCs with extra steps, right? Partly yes and partly no, but the difference is liquidity, right? Traditional VC locks money away for years. Amber's reserve keeps a slice liquid, right? Letting institutional clients enter, earn exposure, and exit if, mandates change. Now think VC meets ETF spiced with DeFi yield wrapped with a comfy risk coat. And one last analogy before landing the plane then, right? Early electric car buyers had range anxiety until superchargers popped up, right? Amber's reserve could be the supercharger network for institutional crypto adoption, right? Build it, prove it, works, and suddenly the highway is packed with Teslas. Only this time, Teslas are billion-dollar pension funds, and the highway is the blockchain.